Hello everyone, welcome back to my channel and then don't forget to like, comment, share and subscribe. By medical Sydney research, a shelter sold on Monday as the mounting risk of more aggressive rates hits into the United States and Europa Stanford bond yields and the dollar salary figure and tested equity and earning per population. Federal Reserve said Jerome Powell's promise of policy pain the concern inflation questioned how that the central bank would reduce to the recourse of markets as so often in the past. The total of measures was driven home by Erover Central Bank board member Isabel Snabel, who warned over that weekend that central banks must now powerfully possible to combat inflation even in that drag their economies into recession. Yet triggered a sharp fall in a relevant futures as market predicted in the race the HCB could hike by 75 basis points next month. The main takeaways are trending inflation is job number on both the Fed and the food rates need to get to a latest level of and 3.5% to 4.0%, said Jason England, Global Bonds Portfolio Manager at Janus Henderson. Investors the rate will need to stay higher until inflation is brought down to their 2% target. So rate cuts presented into the market for next year are premature futures are now increasing in around 64% change the Fed will hike a big 75 basis points in September and see rates speaking in the 3.75 till 40% range. Much might depend on the Argus falling figures so this Friday when analysts are looking for a moderate rise of 2 to 85,000 following July's blockbuster 528,000 gain. The hawkish message was not what well served wanted to hear and CNP 500 voters went down a voter 1.1%, having seen almost 3.4%. On Friday, Nasdaq future lost 1.5% with this stock first by the outlook for slower economic growth. Thank you for your much. Thank you for attention. Thank you for But then that's all for me. I'm so sorry for mistake, and then don't forget to like, comment, share, and subscribe. Thank you. See you next time.